Roughly 90% of all foreign exchange transactions on Earth involve the US dollar on at least one side of the trade. Oil, the commodity that powers nearly the entire global economy, is priced almost universally in dollars, no matter which countries are buying or selling it. Central banks around the world, from countries that have no political alliance with the United States whatsoever, still hold a majority of their foreign reserves in dollars. The United States makes up roughly a quarter of the global economy, and yet its currency touches nearly every corner of international trade and finance. This is the story of why the world can't quit the dollar, even when it desperately wants to. To understand this, you have to understand what a reserve currency actually is. A reserve currency is a currency that other countries hold in large quantities, not because they necessarily want to spend it inside that country, but because it's useful, trusted, and widely accepted for international trade, debt, and financial transactions with other nations. Throughout history, only a small handful of currencies have ever achieved true global reserve status, including the British pound during the height of the British Empire, and now, for the past 80 years, the US dollar. The dollar's dominance didn't happen by accident. It was deliberately established at the Bretton Woods Conference in 1944, when the world's major economies agreed to peg their currencies to the dollar, which was, at the time, itself pegged to gold. Even after that gold backing was removed in 1971, an event that could have plausibly ended the dollar's dominance, the dollar's central role in global finance not only survived, but actually deepened over the following decades. One of the most important reasons for this is something called the petrodollar system. In the early 1970s, the United States negotiated agreements with Saudi Arabia, and by extension much of the rest of OPEC, that oil would be priced and sold internationally in US dollars, regardless of which countries were buying it. In exchange, the US offered military protection and political support to Saudi Arabia and other Gulf states. Because oil is one of the most universally needed commodities on Earth, this single arrangement created enormous, sustained global demand for dollars. Any country wanting to buy oil, which is to say virtually every country on Earth, needed to first obtain dollars in order to do so. This demand has persisted for decades, reinforcing the dollar's central role in global trade far beyond oil itself. But the petrodollar system, while significant, is really just one piece of a much larger structural advantage. The deeper reason the dollar remains dominant comes down to something economists call network effects, the same basic principle that explains why nearly everyone uses the same few social media platforms, or the same handful of operating systems, even when technically comparable alternatives exist. Once enough of the world's trade, debt, and financial contracts are denominated in dollars, it becomes overwhelmingly convenient, and often simply necessary, for other countries and companies to continue using dollars as well, because that's what everyone else they're doing business with is using. This creates what's sometimes called a self-reinforcing cycle. Because so much of global trade is priced in dollars, countries need large dollar reserves to participate smoothly in that trade. Because they need large dollar reserves, their central banks hold significant amounts of US government debt, since treasury bonds are considered one of the safest and most liquid ways to hold large dollar reserves. Because central banks around the world are reliably buying US debt, the United States can borrow money more cheaply and in much larger quantities than most other countries could ever manage. And because the US financial system remains so deeply liquid, stable, and interconnected with the rest of the world as a result, the dollar remains the most convenient and trusted currency for international transactions, reinforcing the entire cycle all over again. This gives the United States what French officials, decades ago, memorably called an exorbitant privilege. The US can borrow extraordinary sums of money, often at lower interest rates than other countries would be able to secure, essentially because the rest of the world continues wanting to hold dollars and dollar-denominated debt. Few other countries enjoy anything close to this advantage. Even groups of nations have explored this collectively. The BRICS coalition, made up of Brazil, Russia, India, China, and South Africa, along with several newer member nations added more recently, has discussed, at various points, the possibility of developing a shared alternative currency or payment system specifically designed to reduce collective dependence on the dollar for trade between member nations. And yet, despite years of these efforts, genuine and sustained, the dollar's overall share of global trade, reserves, and international debt has declined only modestly, and remains, by a very wide margin, the world's dominant currency. Understanding why these de-dollarization efforts have struggled to gain real traction reveals just how deeply entrenched the dollar's advantages really are. There's also a matter of institutional trust that goes beyond pure economics. Despite periodic political turbulence within the United States itself, global markets have, for many decades, generally viewed American financial and legal institutions as relatively stable, predictable, and governed by consistent rule of law, particularly compared to the alternatives. Confidence in a reserve currency isn't just confidence in an economy. It's confidence in the political, legal, and institutional system standing behind that economy, and this kind of trust, once firmly established, tends to be remarkably difficult and slow to displace, even when a rising alternative economy grows significantly larger over time, as China itself has demonstrated over the past 2 decades. None of this means the dollar's dominance is permanently guaranteed or immune to future change. Reserve currency status has shifted before in history, most notably from the British pound to the US dollar over the first half of the 20th century, and that transition, notably, took decades to fully unfold, driven by dramatic, sustained shifts in relative economic and geopolitical power between nations. Many economists and analysts believe a similar shift away from the dollar, if it happens at all, would likely be a similarly slow, gradual process, rather than any kind of sudden, singular collapse. Some economists also point out that a genuinely multipolar currency system, one where several currencies share global reserve status more evenly, rather than one currency dominating entirely, could theoretically emerge over time, particularly as China's economy continues to grow, and as more countries actively seek alternatives following the aggressive use of dollar-based financial sanctions in recent years, especially in cases like Russia. But even in that scenario, most analysts expect any transition to take many years, or more likely decades, rather than occurring suddenly. For now, the underlying reality remains remarkably consistent. The dollar isn't dominant simply because the United States is powerful, though that certainly plays a meaningful role. It's dominant because an enormous, deeply interconnected global system, encompassing trade agreements, debt markets, central bank reserves, and everyday international transactions, has been built, layer upon layer, around the dollar for the better part of a century. And unwinding a global financial system that deeply, thoroughly entrenched isn't simply a matter of political will, or even economic ambition alone. It requires building an entirely credible, trusted, liquid alternative, one capable of doing everything the dollar currently does, at global scale, reliably, and consistently, for the entire world all at once. So far, despite genuine and sustained efforts from multiple major economies, nothing else on earth has managed to do that.